Well, joining me now is Andrew Darcy, Managing Director of Roberts and Ryan, a veteran-owned broker-dealer on the floor of the New York Stock Exchange. Darcy is also a Navy veteran. Welcome. Thanks so much for joining.
It's great to be here with you. Thank you for having me.
Let's give viewers a sense as to Roberts and Ryan's presence on the floor and how it is honoring veterans, not just today, but in some.
Yes. So our company was started in 1987. We're the oldest veteran-owned broker-dealer that exists. And we're really proud to be able to have a presence on the floor of the Stock Exchange. We have 8 members down here, and we trade an average of 120 million shares a month down here. So it's great to be here and great to be part of it, this great place.
Yeah, absolutely incredible. Since the market is open for trade, want to get your take in terms of what you're seeing right now when it comes to equity positioning.
So we've seen recently, and I think there's a lot of talk recently about how expensive the market really is. So valuations have become a concern, and leadership has really narrowed quite a bit. You know, we've only seen, especially the Mag 7, we've really only seen a portion of that Mag 7 really take leadership. And so it is somewhat concerning for us to have a narrowing leadership in the marketplace, but we are seeing some clients now becoming a little bit more defensive. We've noticed that a lot of our clients are rotating out of some of these more high-flying names into more defensive sectors, especially ones that are paying dividends.
Yeah, I want to talk more about the culture of veterans, hiring them, training them at Roberts and Ryan. What more can you share about that?
So at Roberts and Ryan, we're really focused on giving back to the communities that we came from. And our goal is to really be able to build a lasting, existing, business, a strong business that is able to give back again to the communities that we came from. We know that the characteristics of veterans that make them successful, the discipline, the integrity, the work ethic, are important parts of a growing business, important parts of any business. And we recognize that being a part of that for our firm creates success. And if we're successful, then we can give back again to those communities. We're close to several different charities. We've donated close to $3 million since our inception. And we support over 50 different charities. And again, knowing those communities that we came from, we all feel very blessed to have had the opportunity to serve, and we want to be able to continue to serve in a different way and be able to serve, those communities.
I see your own background includes 30 years on Wall Street in institutional equity trading. What have you learned over those 30 years?
I've learned that integrity matters. I think is probably the most important thing, and that those certain things change over time and certain things never change. And one of those important things, again, is that work ethic, that discipline, that integrity, I think have allowed me and give me the opportunity to be able to serve for that long here in this community. And the markets, again, will change. And our clients' view of liquidity has changed over the years, and the market has changed quite a bit over the years. But being able to adapt and adjust to those changes was a big part of being successful and helping to run a successful business.
What are you hearing from institutional clients right now?
They're really, I would say, are concerned because obviously with the government shutdown, hopefully we'll get that open pretty soon. But I think what most are concerned about is how far we've come, and that sooner or later there are some cracks that are starting to show. In the last couple of days, we've heard different stories about some cracks in the private credit market. We've seen some credit card data that's been a little bit concerning as well. I think delinquencies have risen to the highest level they've achieved since 2011. And so there are some concerns, and we're talking about pulling back a little bit in the marketplace. So that's why we've seen a little bit of a shift to the defensive sectors. Interesting.
And so as we look to round out the year, anything that you're watching in particular as we're now just about halfway through the fourth quarter?
Well, let's get the government open. I think that'll be a big relief. I think we saw a huge bounce yesterday in the market, right off the 50-day moving averages, which is a good, important sign. And we could see a rally into the end of the year. I think that could be positive. But I think what concerns us is going forward, can we continue to sustain these valuations, especially with how the consumer is doing? So I'd keep a close eye on how the consumer is.
Yeah, consumer spending, of course, making up 70% of the overall economy. And amid the shutdown, we haven't been getting access to federal data, notably the monthly jobs report or the the inflation data. It does seem as if the lack of inflation data in particular, at least from the federal side, is creating a more divided Fed. Are you expecting that the Fed will cut interest rates in December?
Well, I think the number was 64% was a probability this morning as far as a Fed rate cut in December. So it's not a slam dunk. I think originally the market had priced in a slam dunk. So we are concerned a little bit about that. I think that without some more data, and again the data is has been delayed. Without more data, I don't know that the Fed is ready to move again. I think that I would be concerned more about inflation. I'd be really concerned about the consumer.
All right, Andrew Darcy joining me in studio here. He's a Navy veteran and managing partner at Robertson Ryan, a veteran-owned firm on the floor of the stock exchange. Andrew, thank you.
Thanks for having me.
Yep.
Okay.